Imagine this. Two titans stand on the battlefield of money. One, forged in the chaos of the 2008 financial crash, promised to free humanity from the grip of central banks. The other, born just a few years later, vowed to go beyond money and build an entirely new internet. Bitcoin versus Ethereum. Not just coins, not just code, but two competing visions for the future of wealth itself. And today, their destinies collide in a war that could rewrite the rules of power, finance, and freedom. Let's rewind. In 2009, Bitcoin emerged as a faceless rebellion. Its mysterious creator, Satoshi Nakamoto, vanished after laying down the blueprint. A digital currency with no rulers, no borders, and no middlemen. For over a decade, it has stood as the digital gold, weathering attacks, bans, and skepticism. Nations have crumbled, banks have begged for bailouts, but Bitcoin keeps marching forward, unshaken, unchanging. Then came Ethereum. In 2015, a young programmer named Vitalik Buterin asked a dangerous question. What if blockchain could be more than money? The answer was explosive. Ethereum was not just currency, it was infrastructure. A platform where anyone could build decentralized apps, smart contracts, entire financial systems outside government control. Suddenly, blockchain wasn't just about storing value. It was about rewriting how the world works. And here's the shocker. While Bitcoin became the fortress of value, Ethereum became the playground of innovation. One is slow, secure, and unyielding, built for scarcity. The other is fast, flexible, constantly evolving, built for possibility. It's like comparing a diamond to a Swiss army knife, both powerful but serving radically different purposes. But let's talk price predictions, because that's where the clash becomes blood-stirring. Analysts argue Bitcoin could break the $100,000 mark, maybe even storm toward $500,000 in the next decade if global adoption accelerates. Ethereum, some experts whisper of a future where it outgrows Bitcoin entirely, smashing past $10,000 or more as decentralized finance, NFTs, and Web3 applications flood the digital economy. This isn't just speculation. Look at history. In 2017, Bitcoin's meteoric run made headlines everywhere, but Ethereum grew faster, nearly 9,000% in 1 year. In 2021, Bitcoin touched $69,000, but Ethereum stole the spotlight with a surge powered by NFT mania and DeFi explosions. Could it happen again? Could Ethereum dethrone the king? Here's the paradox. Bitcoin is simplicity itself, and that's its strength, a store of value, a shield against inflation, a hedge against governments printing money into oblivion. Ethereum is complexity, constantly upgrading, evolving, pushing boundaries. But with complexity comes risk, bugs, hacks, failures. If this comparison is blowing your mind, hit that like button, because we're only scratching the surface of this financial showdown. Now pause for a moment, ask yourself, when the dust settles, will the world crown Bitcoin as the ultimate untouchable store of value? Or will Ethereum, with its unstoppable innovation, become the backbone of a new digital civilization? The answer could change everything about how we invest, how we spend, even how we live. And the deeper we dig, the more dangerous, fascinating, and unpredictable this battle becomes. So here's the question you need to wrestle with. Which one would you bet on today if the entire future of money depended on your choice? To answer that question, we must dive into the core, the raw technical strengths and weaknesses that make or break each of these digital titans. Because beneath the hype and headlines, the code tells the real story. Bitcoin was built like a fortress. Its supply is fixed forever. Only 21 million coins will ever exist. That scarcity is the backbone of its value. Every 4 years, the halving cuts mining rewards in half, slowing down new supply. It's a built-in mechanism that makes Bitcoin more valuable over time, like digital gravity pulling the price upward. The downside, Its design trades speed for security, 7 transactions per second, that's it. Ethereum, on the other hand, is alive, constantly changing, evolving, adapting. The move to proof of stake in 2022 cut its energy consumption by over 99%, making it greener, faster, and more scalable. And with the introduction of upgrades like sharding on the horizon, Ethereum could eventually handle thousands of transactions per second. But flexibility has a cost. Ethereum has faced bugs, hacks, and congestion. In moments of high demand, transaction fees, known as gas, have skyrocketed, making the network nearly unusable for the average investor. So which is stronger? Bitcoin is untouchable when it comes to security and scarcity. It has never been hacked. Its rules are simple, unbreakable, almost sacred. Ethereum, it's a laboratory where every upgrade is a leap into the unknown. Risky, yes, but filled with opportunity. One is predictable, the other is ambitious. It's stability versus evolution, a clash as old as history itself. Now, let's talk dominance. Bitcoin still controls nearly half of the entire crypto market. It's the entry point, the brand name everyone knows. Governments, institutions, billionaires, they all buy Bitcoin first. It's the digital reserve asset. But Ethereum? It's where the builders are. DeFi, or decentralized finance, lives on Ethereum. NFTs were born on Ethereum. Most of the Web3 movement runs through Ethereum. Think about it. Bitcoin may be the gold, but Ethereum is the oil fueling a whole new digital economy. And here's where it gets chilling. Imagine Bitcoin as the safe in your basement, holding untouchable value. Ethereum is the electricity grid powering your entire city. Which one matters more to the world? That's the kind of question that keeps investors awake at night. If this battle between strength and ambition has you rethinking everything you knew about crypto, drop your thoughts in the comments. Your perspective might just shift the debate. But now comes the real twist. Beyond prices and predictions, beyond technology itself, lies adoption. How these giants are actually used, accepted, and integrated into the real world. And what happens when governments, banks, and entire industries start choosing sides? That's where the story takes its most dangerous, mind-bending turn. Because adoption doesn't just decide who wins. It decides how money itself will work in your lifetime.